Assuming you're a profitable driver, let's talk about how to manage the money that you're going to make. Let's talk about financial management. Step one for me, if I were to go back in time and do this all over again, would be to open a bank account explicitly for my rideshare income, my gig work income, and I would want to make an opening deposit of $2,500. Put that in that account to help me manage the business of my gig work. Don't let that account fall below that amount either. And the reason why is this. That is the threshold for rideshare insurance, the deductible. But also $2,500 is enough money to get new tires or to fix your brakes or whatever expense that you might have. It's more than enough cash in a bank account set aside for you to manage the business of being a rideshare driver. Now you might be like, Levi, I don't have $2,500. That's why I'm a gig worker. I feel you. Make sure that as you're earning money, you're building up that account as quickly as possible. Get it to $2,500 as fast as possible. The good news is this, it's still your money. It's not like it's going anywhere. It's just set aside in a dedicated bank account for you to manage this business. With that account open and all the transactions going into there, you'll be able to get a debit card or maybe even a credit card that will basically be paid out of that account. Banks and lenders will notice that you're managing rideshare as a business. They'll see the transactions of Uber or Lyft paying you, going into this rideshare bank account. They'll see all of your expenses going out of there to pay the business of rideshare. And then they'll see your payment withdrawals to yourself to pay you. That's how a business operates. It collects revenue from customers. It pays the costs of the business. And then anything left over is the profitability that goes to the business owner, which is you, the driver. So when it comes to financial management, there's three things we should discuss: cash flow, taxes, and analysis. Now, cash flow is really simple. It's money coming in and money coming out. And how does that actually flow through, again, that bank account for your gig work? The first thing you're going to want is what's called fixed costs, your fixed monthly costs. Do you have recurring bills that you're going to pay every single week or every single month for rideshare? And this isn't necessarily an expense that you have to have. These are typically expenses that you choose to have. Unlike your variable costs like fuel, maintenance, or depreciation, these costs you're choosing to say, I want these to be as part of my business. Let me give you some examples. A lot of drivers make a portion or their full car payment out of this account. You might make your insurance payments out of this account, tax payments out of this account, your cell phone bill or SiriusXM subscription. For me, I have a Panera Sip Club $16 a month subscription that comes out of this account. These are all expenses that I have to either pay for my car or pay for things that support my rideshare business. And every single month, I have these bills. And before I pay myself, I pay those bills. The key thing with this is to break it down on a per week basis. How much is it going to cost you per week to operate? And it's pretty easy. You just take all of your monthly bills, your car payments, or whatever you want to put into there, multiply it by 12, divide it by 52, because there's 52 weeks in a year, and that's going to give you your weekly fixed costs. So in this example, let's say you have $480 a month in bills, whatever they might be. You multiply that by 12, divide that by 52, gives you $110 every single week that you have to come up with to cover your fixed costs. So again, going back to rideshare and the rideshare business, you have to earn $110 in profitability after your cost per mile to pay for these fixed costs. So hypothetically, you have to make like $150 a week just to cover the costs of doing business as a rideshare driver. So let me give you an example week, October 14th through October 21st. I did Uber and Lyft, and you can see I made $1,159 as an Uber driver. I made $67 on Lyft. I went to the supercharger, $82 worth of superchargers that week. I paid $25 in tolls, which is basically a monthly renewal for tolls. I don't really get that many tolls. And my $16 subscription for Panera Sip Club came in that week. So $1,159 went into the account, $1,104 remained in the account. But that's cash management. That's not actual profitability. Let's break it down a little bit more. I drove 1,018 miles that week, and my actual cost per mile is 31 cents with my Tesla. So I had $315 in variable costs. It's fuel, depreciation, and maintenance. So I had $1,159 come in from Uber, $67 from Lyft. I have my $110 in fixed costs and $315 in variable costs. That means the profitability that comes to me is $801. That's what I withdraw out of that account at the end of the week to pay myself. And for those of you who are an accountant and you like to see a T account, if you're not in the world of accounting, this makes probably little no sense, but it's called a T account. The debits are on the left and the credits are on the right. So $1,227 went into that account. $801 went to me. $82 went to the supercharger. $25 went to New York State for the tolls, and $16 went to Panera. Leaves a ending balance of $302. So imagine if I were to kind of start all over again, I would have $2,500 to open that account. And at the end of the week, I'd have another $302. So I'd actually have $2,800 in that account to cover all the costs of the business. Now, I could see you sitting there thinking to myself, like, that's $300 for what? Well, most of it's really just depreciation. But the idea is that that $302 is sitting in that account for me to use. I might withdraw more of it to pay down a bill on the Tesla. I can save it for the next time I want to buy the next car. But that $302 is on my balance sheet. I'm growing an asset. I'm growing cash in the business. And that's how business operates. Taxes are really complicated. It's a burden of being an American citizen. But for our purposes here as rideshare drivers, it's actually pretty simple. Basically, you just have to track your miles. I know there's other ways to calculate taxes, but if you can track your miles, you know that you're going to get that 67 cents, that deduction for every single mile that you drive as a rideshare driver. Another thing that you might want to do is know the percentage of rideshare use versus personal use. So let's say your car, you drive 50,000 miles in a year. 30,000 are for rideshare, 20,000 are for personal use. So you have that ratio of 60-40. And the reason why is that some of your expenses might be deductible, but it's on the ratio of the use of that vehicle. And quite frankly, assume everything is a deduction. If you go and buy, candies for your passengers, assume that's a deduction. That doesn't mean you should claim it as a deduction, because you should just ask a professional for clarity. So track your miles, know the percentage of use. So understand like how much of your car is personal use versus professional use. Assume everything is a deduction, keep all your receipts, and then when it's time to file your taxes, you're going to have money in the bank because you've been saving money. The reality is this: it's hard, almost impossible for me to give you tax advice because most people have multiple sources of income. So that's why I recommend you work with the team at rideshare.tax.
I've been in CPA practice for over 25 years now. And in fact, with all the travels that I've been doing, I've met with so many rideshare drivers, and we actually launched a very helpful project for rideshare drivers. It's on rideshare.tax. We want to provide professional, high quality tax planning services to rideshare drivers.
Now, the thing that I really enjoy, and it's because I'm an economist and accountant, is I love analysis. I track everything. Well, maybe not everything, but I track a lot of things. I track every single week how much money I've made, how much my profitability was, how much my profitability per mile. And I have a really detailed spreadsheet. I link to it here in this video. Feel free to dive through it and look at it. But this analysis helps me understand what's working and what's not working. So a good example is this. Earlier in this masterclass, I said I used to drive on a college campus, late at night, taking super short trips. I loved it. It was fun, and I made a lot of money. But then the market got saturated. There was too many drivers in that city. So what I started to do was take more reservations, and I have the data to analyze, is that working? Should I go back and try something different? And here's kind of what it looks like in summary. I love the idea of analyzing things like tips. So again, I focus on tips, and let's take a look at it. In 2020, 30% of my passengers tipped me. In 2021, 22% tipped me. I refocused my efforts on tips, and in 2022, 2023, 38%, and now in 2024, 40% of my trips tip me. And the reason why is I've put an effort toward that, and I can measure the success of that. And tips as a percentage of my income went from 11% all the way up to this year, 13.6% of my income. And another analysis, and this one's not too hard to analyze, but promotions used to be a big source of revenue for me. And they still kind of are, but they just come in different ways. But promotion percentage, I used to get 25, 30% of my income from promotions. Now it's down around 18%. Here's another analysis that I like. I want to know how much profitability per hour am I making? Well, because I track every single week, I have that data. And I can go back all the way to February of 2020 and know I used to make around $20 per hour in profitability. Now I'm making around $30 per hour in profitability. And this is online hour, by the way. But a more professional way to look at it would be like a rolling 13-week average. And you could see in the spring of 2023, my profitability per hour is peaking around $35 per hour. And you could see starting right around April of 2024, when the new legislation for New York passed, my profitability per hour has dropped to back around $23, $22 per hour. So when it comes to financial management, if it were me and I could start all over again, my advice is to put $2,500 into a rideshare bank account. And you could use that to pay a deductible on insurance if you need to. You can use that to do a repair on a vehicle. Whatever it is, that's kind of like the bare minimum that you're going to want in that account, and never let that account go below that. Set up that bank account to pay all of your rideshare bills. So when you make money during the week, pay your bills first and only withdraw your profitability. Build cash in that account. Show banks and lenders that you're in business. When it comes to taxes, just track your miles. Keep it really simple. And of course, work with a rideshare tax professional. And you're going to have so much data. Pick and choose what kind of data you want to analyze. You can use a pad and paper, or you can do like me and create some sort of spreadsheet.